so then I should be going live into the Facebook group. And then I need to copy my URL. So where's my URL? Must be on that one. Participants, invite, copy URL, paste. Right, now what I need to do is grab this URL. Just grab this. Copy. Right. So let's do this in the Ninja group next. See if we can get this to work. Can we get anybody to join us today? It always runs really slowly when you're sharing, so let's just see how we go. Paste. Excellent. Post. It's working. Right, I need to get the link into Discord. So, bear with. Groups. Okay, I think we've got people jumping on soon. I'll be with you in a second, guys. Copy. Let's get it in Discord, live trading sessions. Paste. Trading and Tantrums, I think. Right, that's that. So now what I need to do is get this into the free trial group. So I grab that bit, copy, free trial. Oh, I need to do that thing where I just turn off enable waiting room. Oh, nobody's going to want to come in. Hello. Right. Let's just get this rocking and rolling. Right, just post this in the free group. Get people going in there.
Afternoon.
Afternoon, Dean. How are you?
I'm good, you?
Yeah, not too bad, thank you.
Good.
Right, I'm posting live. Am I live in that group? Yes, right. Have I done everything? Right, am I in everything? No, I need to go in that one yet. Oh, God. Bear with.
Take your time.
This is a nightmare, this bit, isn't it? We need a PA. Do all this.
It's horrible.
A nightmare, right. So there we go. That's going into that group. That one there. And I might be brave and post it on my own profile today. Let's see. Get some interested people in. Right. You never know. Somebody might actually watch me who's my family. You never know. Right. Paste. Right. Let's do that. Post. Right. I think I posted everywhere. So I think we're good to go. Right. I think Sharon's session's still on, so I might be a little bit early. I'm a little, well, 2 minutes early anyway, but never mind. Let me just make sure I've enabled. Right, waiting room's off, so that's good.
How do you turn that waiting room off?
Right, when you go into that section where it says participants at the bottom of your Zoom, there's more with a little down arrow. If you click on that, you can untick your little box that says enable waiting room, and that's how I've done mine.
Right, okay, cool.
So that seems to work. Right, okay, so I think I'm everywhere I need to be. Nobody about today, it's just me and you, Dino. That's all right, isn't it? All right, no problem at all.
Be a good session then.
Yeah, it will. We'll have no
Very lit.
interruptions or anything. We just go down the pub. We'll be fine. Right. Do I need to put it in anything else? Have I not put it in something? Oh, here we go. Oh, Rob Huntley's in, my main man.
You're right, Rob.
So, congratulations, Roberto, on your achievements this week. I can't hear you. You're muted.
You're muted.
Yeah, as I was saying.
You're right.
Yeah, you?
Yeah, good, good.
How's your trench?
My trench is filling in, which is great. It's all good now. We've got our water back on, and yeah, the water pipe's fixed up, so we're kind of getting back to normal. So phew. We don't smell anymore, so we've got water, so that's all good. All is
super.
Good. Yes. Right, Tom. Good day, mate. Back on and oh, he's got me playing in the background. Hello. Right. Okay, I'm not going to wait for loads of people to jump on because that might be it. That might be our crowd today, but that's cool. Right, so let's just go straight into screen share, shall we? G'day, mate. Oh, no. Said that about moving my lips. Did you hear that? Right, if you could just mute yourselves out, guys. Otherwise, I'm going to get feedback from everybody. So, right, let's just share a screen. Right, so today we are basically going to go through what is Forex trading, why do we do Forex trading, what are the benefits of it, and, you know, when people sort of come into this, I mean, this is very much based on complete newbies coming in and not really knowing what they're looking at, why they're looking at this, what is a chart, what is, you know, all that kind of stuff. Please, when you come into this free trial, don't panic if you look at a screen like this and just think, oh my goodness, what is going on? Because when you do join as a customer, you will be taken by the hand and you will be taken to our IM Academy, which is in your back office. It will be, and it literally, it breaks down the incredible training that is in there. We'll break it down to what is Forex, how do we trade Forex, what is a pip, what is a lot size, what is a currency pair, what is a buy, what is a sell, what is a bear, what is a bull, all the sort of phrases and terminologies that you're going to hear on a daily basis in these live trading sessions that might at the moment be blowing your mind. Please don't panic, because when you decide to join us, everybody goes through the basic training and it will just, everything will just make sense after that, believe me. But what we are doing on these live sessions is we are just going to go through some charts, because there's people on here that have been in a few weeks and they want to sort of get to grips with the charts, get to grips with candles and indicators and all those Chinese phrases you're going to hear that you might think, oh my goodness, right, I don't understand. But please don't panic. This is going to be showing you the really, really basic strategy that we use in our team, among others, but this is the basic one, called the BYOB, and it stands for Be Your Own Bank. And it is an incredibly simple strategy that you can come in as a complete newbie and you can look for these 3 rules on your charts by yourself and, you know, figure out whether you want to take that trade or not. And you can learn how to trade within a week doing this BYOB. And then what happens is, as you get used to that, you can progress, you can start to add more things to it, you can start to look a bit deeper onto the charts, you look at bigger time frames. So there's loads and loads of stuff that will be going on that you will learn gradually. And at first, it's very natural to feel overwhelmed because you're learning something new. It's like with anything you learn that's completely new, it's going to take a while for it to sink in. But the more sessions you can jump on, the more live trainings you can join us on, it will start to make sense, believe me. But please don't expect to sort of go on one session and be like, oh yeah, I know exactly what you're talking about. Because it takes a while, doesn't it? So, right, so why are we doing this anyway? So let me just see if I can drag this on. If I can drag that. Is my spreadsheet just dragging onto the page? Is that on there? Oh,
Yeah.
right.
Yes, it is. Yep.
That worked. Right. Okay. I'm dragging stuff around now. This is good. Right. So why do we trade Forex? Why do most people join? Well, most people join because they want to build up an account, a pot of money, so that they can, you know, eventually become financially free and maybe use this rather than go to work. Not everybody wants to do that. Some people absolutely love their jobs and they would just like a little bit of extra money each week. So this isn't, you know, you don't have to look at this as like, right, this is me, this is my retirement plan. This could be a little bit extra each week, or if you take it to the next level, this could, you know, set you financially free. So we always say when we trade that we want to compound our accounts, and we would like to risk only 3% of our account when we trade. 3% is a nice number to risk. You know, you're either going to win 3% or you're going to lose 3%. But I just want to show you on this sheet the power of 3% account growth a day. Now, we on this session are kind of the 10 pips a day club. Now, a pip is a position in the charts which relates to a monetary value, depending on the size of your account. But don't worry about that. That's all going to be explained. Now, 10 pips a day is what we are going for. And if you put your right lot size on, 10 pips a day can give you a 3% account growth. So some people say, well, how much money do I need to join? When I first come in, what do I need to do? So let's just start off. Let's just say you started with a trading account of $100, okay? And people are like, oh, really, $100 doesn't seem very much. It doesn't sound a lot, but the power of compounding, and this is why we are doing our 10 pips a day club. Let me just show you the power of that. So each one of these numbers down the side here represents 1 day of trading, okay? We trade 5 days a week. Saturdays and Sundays we don't trade unless you're into trading gold and stuff like that, and Bitcoins. So on day one, you start with an account of $100. You get your 10 pips a day, okay? And you grow your account by 3%, giving you a returning profit of $3 for that day. So your actual daily amount now is $103. And you'll say, oh, whoopie-doo. I'm just going to shut this door because my children are about to kill each other and I can hear them. Hang on. Just in case anyone phones the police. Wonders what's going on in my house. Right, okay. They're getting a bit restless. So, as I was saying, so on day one, you've grown your account 3% and you're now got $103. And people are like, oh, $103, that's not going to, you know, set me financially free. That's rubbish. Well, no. You really do need to look at the bigger picture when it comes to compounding money, okay? Really, really look at the bigger picture. So as you can see, on day two, you're starting with $103, okay? Your amount in your account is suddenly grown by $3. You, again, get your 10 pips a day at 3%. You've earned $309 that day. So you're starting the next day on $106, right? You do that every day, just 10 pips. All you need to do is to get 10 pips at a 3% growth, right? Now, this is a mathematical formula. There will be days where you would lose a trade. There will be days where you go back 10 pips. There will be days where you have a really good day and maybe you've gone in for 2 trades and you've got 6% that day. This is a mathematical based formula which you can just have a look at to give you an idea of what we're doing here, okay? But please, this is not set in stone. This is not, I'm guaranteeing this or anything like that. This is what is possible with maths, right? So let's just jump ahead to day 20, right? You've grown your $100 to $175. You're still going for 10 pips a day. You're still going for 3% growth. Now you're getting a return of $5 a day, right? Which is much nicer, you know, you're starting to get a little bit more money. Right. Now this becomes very interesting, right? When you've stuck with this for a little while. Right. So let's just jump ahead. Let's just say 60 days time, right? In 60 days time after you join, right? Your $100 has grown into $572 based on a 3% growth a day, just getting 10 pips, right? You're now getting a return of $17 a day. Now, what happens is this money will start to grow quite quickly when you get to the bigger numbers, right? So let's just say 100 days. You've now been trading with us for 100 days. Every day you come to our live trade-ins, you get your 10 pips on the 10 pips a day club. As you've seen you must have seen the results people are posting. People are getting their 10 pips a day. They're getting their 3%. If you stick with us, right, you've grown in 100 days, you're $100 into $1,800, giving you a return of $55 a day, right? But remember, we're not taking this money out yet. The whole idea of this is compounding this money until you've got an account size that you're happy with, right? So the next day you start with even more money. So let's just jump forward to 200 days, right? This will blow your mind a little bit. Actually, 200 days is too far because that's going to blow your mind. Right, I'm going to let's go to 140 days time, right? 140 days of trading, 10 pips a day, 3% growth. Your account is now £6,000, right? Dollars, sorry, this is in dollars, $6,000. But it's giving you a return of $182 a day. Now, I know a lot of people, that is quite a good wage, right? $182 a day, if you were in a normal job, is quite a good wage. So in 141 days, by growing your account by 3% at 10 pips a day, your return on profit could be $188, $182, whatever it is, right? But if you skip forward, if you keep doing this, right, let's just go to 200 because this will blow your mind a little bit. In 200 days, right, 200 days is nothing, is it really? It's not long in your life, right? Your $100 has turned into $35,000, right? This is when this gets mind-blowing. And all you've ever done every day, this is what you know, you need to get your head around. All you've ever done every day is got 10 pips at a 3% account growth, giving you a return of $1,000 a day. Could you live on $1,000 a day? If that was all you ever did, right? If you stopped compounding at that point, after 200 days, if you said, right, I'm not compounding anymore, I'm just going to have an account with $35,000 in it. And every day I'm going to get my 10 pips and I'm going to take out $1,000 a day. The next day you start with the same amount, you take out $1,000 a day. Next night you say, because you're taking it out at this point. You don't need to get your account to $1 million or $500,000. You could stop at $35,000 account and take out $1,000 a day. And literally you've always got an account of that size. But let's just say this is a mathematical formula. This is 200 days time, right? Let's just say that, you know, it took you a while to get used to it. You had some bad days. Let's just half that, right? Just say you didn't get 10 pips a day. You know, you've had a couple of bad days in that month. And let's just say half of that, right? In 200 days, if you had a few losses, yeah, and you could have grown your $100 into $1,800, you could still get $55 a day out, all right? This is still incredibly powerful. But if you look at the results that our live traders are getting, our 10 pips a day clubs are getting, we are getting our 10 pips a day, and people are getting more than 10 pips a day. So this is our why. This is why we are going for 3% account growth for 10 pips a day. And people always say to me, 10 pips just sounds really rubbish. Like, you know, you've got these traders who are going for 50 pips and they're showing their charts with like, oh, I got 200 pips today, which is fantastic. But when you're going for that many pips, your lot size is a lot smaller. So, you know, you have to put bigger stop losses on. At the end of the day, they could still have had the same amount of money as what you have had getting your 10 pips. It's all about the right lot size to the right account to the right risk to reward, which you will learn all as part of your I Am Academy. So,
Sarah,
yes.
Just to have interest, what's the money look like at 260 days?
260 days. Let me just find my sheet again.
Oh, actually, hang on, sorry. 235, sorry, 235.
235 days, $100,000.
So the interesting thing for me there is 235 trading days is 1 year.
Yep.
And that's allowing for the fact that you would probably lose one trade in 10, which is about what this group achieves, about a 90% success rate. So I think for anyone new coming in, that's just mind blowing, because you could start with $100.
Mm-hmm.
What else can you do with $100 that would leave you with $100,000 in your account in a year's time?
You're certainly not going to get that from Barclays, are you? You're not going to get that from your ISA, are you?
No.
That's why this is why this blew my mind when I joined. I just thought, Forex trading, no way. That's something that like people on Wall Street do. That's something that bankers do. That's something that, and it's suddenly Forex trading is now very accessible to people like me, to people like us who are just kind of what I'd call regular people who would go out to do regular jobs. If we could learn this skill, it is now accessible for the retail traders like us to be able to do off of a mobile phone, off of a tablet, off of a laptop. If you can master getting 10 pips a day, you know, this is what blows my mind. This is what keeps me motivated. This is what keeps me going, right? You will have days when you have an awful day. You will have days where you have setbacks. There will be days where you double your, you get more than that. This is just a mathematical formula, but what is possible is this. If you can get your mindset in the right place to go for your 10 pips a day and just stop and just walk away and say, right, I've got my 10 pips, that's it, I'm done. Because, if you get greedy, you can give it back to the market in the next hour. So get your 10 pips, walk away, done. That is the power of Forex trading, and that is what we have got our hands on here, guys. And I just wanted to go through that with you because a lot of people are seeing some of these other traders. You see people on Instagram and they're flashing these big amounts of lot sizes up and how many pips they've got that day. But really, if you can master a strategy where you can get 10 pips a day, then it just will blow your mind. It really will. And it is incredibly exciting. So I just wanted to go through that with you just to show you the power of that, because I know we've got lots of people in the free trial group and they're not really sure, what all that means. And that's a very, very rough idea of it all. But I just wanted to give you that as a little, wow, what is possible here, right? So how do we do it? That's what we're here to find out. How do we do that? Right. We are using a Forex trading strategy called the BYOB. Now, there are thousands of Forex trading strategies. Everybody's got a strategy. Everybody's got the best strategy since sliced bread. Everyone's got something. What you need to do when you come into Forex trading is find what works for you, what works for your lifestyle, what works for your, I suppose, how brave you are, how long you want to be in a trade, how quick you want to be out of a trade. It's all going to become very, very clear to you the more you do it, the more you practice, the more you try different things of what will work for you. All I'm showing you today is the BYOB because it is a very simple strategy. It gives you the ability to get your 10 pips a day quite quickly, quite easily, without the need to learn loads and loads and loads of strategies and indicators and all the crazy stuff that you see on people's charts. Okay, I want to break this down so this is so simple for you that you can see how powerful and how simple it can be to get 10 pips a day to do that with your account, right? So when we trade Forex, we are very much looking at the news because the news will affect currency pairs. It will affect the way that currency moves. It will affect the US dollar. News will affect, the Japanese yen. It will affect gold. It will affect oil, as you've seen in the news. So all of those things have an effect on currency pairs. Now, what we do to check, to see before we trade, to make sure that, the markets are quite settled and they're not going to go crazy, is we look at something called forexfactory.com. Now, this is a website you can go onto and it gives you all the things that might be coming up in the news that would affect the Forex charts, okay, would affect the trades. Anything with a red flag means that that's going to make the charts quite volatile. It could be not a good time to trade, like, for example, here on Sunday, Trump's going to talk, right? If Trump's going to talk, you know that something's going to be said, right? Something that could affect everything. So you really don't want to be trading when Trump's talking. You don't want to be trading anywhere near Trump, to be honest, because he speaks a lot. He's got a lot to say, that man. So just be careful of Trumpy, right? Because he does affect the markets. Same with Boris, all these big leaders. And what you do is when you come to Forex Factory, there's a little timestamp up here. If you click on that, you can set up your Forex Factory to your time zone, okay? So just choose your current time zone and then it will give you the latest news. Right, so what you do is today's Thursday, so you go down to Thursday and you would look to see if there's any red or orange flag news that could affect the markets today. So as we can see this morning, the euro was very much red flagged. Look, there's 3 red flags and 3 orange flags. So that there from 8:15 this morning to 9 o'clock, and look, Great British Pound was straight after that with red flags. Euro and Great British Pound, I would not trade this morning. Look at that. There is loads going on. There is industrial orders. There is flash services. There are so many things going on. So it would tell me that, before I start to take a trade, just to be very cautious with those pairs because everything on the chart could line up, right? And you could think, right, this is going to be a brilliant chart. And then suddenly some news could hit and it could completely go the opposite way and it could hit your stop loss. And that's going to run one of those days where you would lose 10 pips rather than gain 10 pips. We don't want that to happen. We want this, we want a really good win rate with this, and we want to make sure that we're looking at everything. So Euro, Great British Pound, avoid, avoid, avoid. But look, all day today, we've got the EU Economic Summit. Now that is all day. There's going to be stuff being announced in the news all day on the Euro. So Euro today would be a big kind of watch out, okay? And then this afternoon, at 1:30, we had unemployment claims, which at the moment we know because of what's going on, it's all a bit crazy. So the US dollar this afternoon is also one to be careful of. But most of this news should be out of the way now. We normally sort of give it an hour before, an hour after news, before we start looking at trades again. So at the moment, we should be clear. We should be good to go now because everything's kind of out of the way, apart from obviously the all-day Euro Summit. So we do use Forex Factory. It's a very good tool. It's a free tool. There are other companies that do calendars like this as well. There is one on the FX book, myfxbook.com. They do a calendar as well, which is a lot more detailed. But for simplicity, we just go to Forex Factory. It's nice and easy to look at. If you want to go into any of these folders and see what's been going on, you can click on those and it will literally open up and tell you exactly what's going on in the news. So if you're into that kind of stuff, there you go. You can have a look at that as well. Excuse me. Right, okay. So we've got a check sheet, a checklist, which we give to everybody that joins to do the BYOB. And we just work our way through this checklist. And I'm going to talk you through this checklist now to show you how you get your 10 pips, okay? So number one on this list was check the news, okay? It's pretty simple. You can check the news. That's not a problem. We all know how to check the news now. We go to forexfactory.com, we check the news. The next thing we do is we use one of the tools that IM Academy give us called the vibrator or web analyzer. Now this is the old styly one. There's a brand new one that they've just launched, which is all singing, all dancing, very, very nice. But I do prefer this old one at the moment. It's because I'm used to it. It's what I grew up with. It's what I've learned trading on. The new one is very, very good. They pretty much mirror each other anyway, but I just always tend to log on to this one. So what this does, this piece of kit was created by somebody within IM Academy called Stephen Hooley, who is an absolute programming genius. And he has created this tool that looks for volume bursts in the market. And it gives you out signals of pairs to look at and what you need to go and have a look at. And you can set this to different time frames, because in trading, you can trade all different time frames depending on the sort of trader you are. And it gives you a ching ching when a new one comes in. And it gives you a trade idea. Now, these are trade ideas that we want to go and look at. Now, it's given us a trade idea on the 15-minute time frame for the GP CAD. Now, that is Great British Pound, Canadian dollar. Okay, you'll learn all these little symbols, GP, CADs, and all those sorts of things. Now, it's telling us that something's going to happen with the Great British Pound, Canadian dollar. So you can click on that pair there. And it's telling us that something's going to happen. Right. Now, what I tend to do now is I go over to a free website called tradingview.com. Okay, anybody can set up a free TradingView account. It's completely free. You go to tradingview.com and this is what it looks like. This is it's what we call a naked chart. There's nothing on this apart from trading candles and numbers. Okay, so at the moment we have these candles on here. Now these candles are called Heikin-Nashi candles. You can set different types of candles on this. These are normal candles. These are Heikin-Nashi candles. Now for the strategy that we're looking at today, we want Heikin-Nashi candles. These are Japanese candles and these show you the trend of the trade. These are the ones we want for this strategy. Okay, all the other candles relate to other strategies that you can look at another time. So first thing we do, we go to the 15-minute time frame because that's what the web analyzer called it on. As you can see, it's going to play out now, 15-minute. Okay, now the pairs will be down here and you add them as you go. As you build up your trading view, you just add the pairs. So you've got all the different currency pairs here. So we're on the GP CAD, we're on the 15-minute time frame, and we're on the Heikin-Nashi candles. Right, now we need to put something on this so we can see what's going to happen with this trade. And the next thing we put on is something called an indicator. Now this indicator is going to give us a little bit more information about this trade, okay? So when you go up to the top of Trading View up here, indicators, you can search in the search bar and it's an indicator called the stochastic. So you can start to type it in there. And actually I've starred. If you put a star next to ones that you like, you can save them in your favorites. But there is training on how to use TradingView as well in our group. Right, as you can see, what's happened here is it's dropped this wiggly line on this purple zone down here. Right, now this is our stochastic. Now, you can see that there are green and red lines on this. Now, the green line represents the buyers. The red line represents the sellers. Now, if you look at these candles, when the candles are red, that means this trade is selling. It's in a sell, okay? It's going down. When it's green, it's in a buy, it's going up. Now, the stochastic mirror these candles pretty much. So, as you can see here, it's going sideways like it is here. The buyers took control. They crossed over the red. They took it up, which is here. They went up for a buy. And then look what's happened here. This red line crossed over the green line, meaning that the sellers are taking back control of this trade and they've taken it down. As you can see, it came down, but they didn't take it down very far. The buyers took it back. They took it up here. But look, this is the one we've been interested in. Look, the sellers took it over and there's a big gap now between the red and the green, meaning this is stronger now to come down. The sellers took it down and they took it down, look, all the way down here. Now you've got a little ruler on here. If you click on where they crossed over there and measure down, that move there was 107 pips. How many pips do we need a day for that spreadsheet? 10. We only need 10. That was a 107 pip move. You can see how easy it would be to grab 10 pips a day out of this chart, don't you? Right, but look what's happened here. The web analyzer, excuse me, has called this pair that something's going to happen. Look what's happened. The buyers, these two lines have come out of this purple zone. This means that this is in the stock. This is in the extreme. We want this to be in the extreme to take a trade. This means that this is oversold. It's oversold. It's gone below purple. It's oversold. So it now needs to buy. It needs to buy to bring this back up again. And look, the buyers have crossed over the red and the buyers are taking control of this trade and they are going to bring this up. They are now going to bring this back up here. So now we are interested in taking this trade for a buy, right? But before we do that, we need to look at another indicator. Now, the next indicator we're going to put on here is called a PSAR, which is a parabolic stop and reverse indicator. So we go up to our indicators, we type PSAR in, there it is, parabolic SAR. We're going to add that. Now, what you can see now is that it's dropped these yellow dots onto my chart. Now, these parabolic SARs follow the trades down and they follow the trades up. But what we are interested in is when this was on top of the red because it was going down. They were on top. They were taking it down. But look what's happened. That parabolic star has stopped. It's reversed. It's gone under the trade. It's gone under the candles. So the parabolic SAR has stopped and reversed. This is brilliant. This is what we want for our BYOB. Because on our checklist, the things we need to check for before we get into a trade is, number one, is the stochastic in the extreme? Yes, tick. Has the parabolic SAR stopped and reversed and flipped? Yes, we've had a flip, right? Which is flipping great. That's what we love it. It's flipping great when they flip, right? It's flipped under. So at the moment, I'm getting excited about this trade, right? This is good, right? This is a good trade looking like. The next thing we need to check before we take this trade is we need to go back to our candles. These are high Kanashi candles, remember? So we need to make sure that these candles are happy to come up. Now, the way we test that is, as you can see, the ones that came down, if one of this candle here has got like this thick color and then this little spike coming at the bottom, this is the body of the candle, this thick part. This spike is called a wick. We don't like wicks when we're trading. We don't like wicks when we're trading the BYOB because that's indecision in the candle. Right. What we want for a sell is we want a flat top. And you can see this candle here is a lovely flat top. There was no wicks coming out the top. The one before it was very wicky. That's called a doji. It's got a wick at the top and a wick at the bottom. It's indecisive. It doesn't know whether to go up. It doesn't know whether to go down. We like these ones with flat tops or flat bottoms, because these ones are our decision candles, right? Now, the way to remember this, if you want to be in a sell, you want that to be a flat top because you want to be able to push that candle down. You don't want to be spiked by a wick coming up. You want to have a nice flat top so you can push that candle all the way down for a sell. Okay, same with the buy. If you want this to buy, you want that to be a flat bottom so you can push those candles up. They push up for a buy. At the moment, this candle, this candle was sent out a big wick. Look, if you tried to push that up now, you'd get stabbed by that wick. You don't want to be trading that at the moment. And look, as you can see, we've got a little red candle coming next to it. So this is a little bit unsure of itself at the moment. Even though we've got stochastic in the extreme, we've had the blue cross over on the bottom, and we've had 2 PSAR flips. This is looking very, very good. But with the BYOB, we have to make sure all 3 of our criteria are met. So 1, is the stochastic in the extreme? Yes. Has the PSAR flipped? Yes. Have we got a flat top or a flat bottom candle? No, not yet. Okay, it's not ready yet. Okay. As soon as we get a flat bottomed green candle forming here for a buy, that is when I'd be interested in getting into this trade. We only want 10 pips out of this trade. So what we then do is we see if it's got room to move. Now, as you can see here, there was a lot of action around this area here. And that tells me that there is something interesting about this area. So let me just draw this line here. Okay, I'm going to draw a horizontal line in there. There's a lot of support and resistance along this line. Can you see that? Let's scan back. Look, it goes right back. If you look left on your charts, if you always look left on your charts, you can see what's been going on. Look, this line, it's come up, it's respected it, it's kind of broke through, but it's respected it. It's clinging to this line. This is a very strong line of support and resistance, which tells me that this trade would probably want to go back to that line. Now, if we measure from where it is now up to that line, there's 74 pips there that we could possibly get into, but we only want 10. That's why this is quite a safe, nice, easy strategy. When all our 3 criteria are met on this trade, we would press market execution on our MetaTrader 4s for a buy. Right, you don't want any of these sell stops, sell limits, buy limits, all that sort of stuff. You'll learn all that in your academy. With this strategy, it is just buy or sell. And I'm going to shut this door again. Hang on a sec. As you can see, I am completely in control of homeschooling. It's going remarkably well, and I've even been Ofsteded, right, by the school. Look, I got Ofsteded today, so I've got Ofsted as piss poor. So I've not got an outstanding Ofsted at my school. It's not going well at all. They're running riot.
You're doing a grand job, Sarah. Carry on.
Thank you very much, Rob. So anyway, with my Ofsted just completely gone. Right. So as you can see, there is a big line of support and resistance here. And support and resistance is something you will learn as you progress through. And it does make a big difference as regards to the way you look at the BYOB. But you can just do this with these 3 simple indicators, which is why I love it for new people, because you don't want to confuse you with loads of lines and crazy stuff going on the charts. So I'm going to get rid of that for now. Another thing we look at as well is trend lines. It's something we look at a bit further down the list, but at the moment I only want to concentrate on the top bit because that's the bit that will get you in and out of trades and get you profiting straight away. What we do is you can draw trend lines onto charts to see where the trend of the trade is. And if trend lines are broken, that's a good indication that the trade is about to turn. So let me just give you a quick example of a trend line. Now, you can go up to here and do trend lines. Now, a trend line is something that you draw through the candles, and what you want to do is you want to draw a trend line where it's touched the candles the most. Okay, so it's very hard on Heiken Ashes to draw trend lines. It's much easier on the other candles. But let's just say that the trend line was there. All right. Yeah. 1 minute, I'll be there in a minute, okay? Go on, go and find something to do. Come on, I can't help you at the moment. Right. This is not a very good trend line to draw because it's on Heiken Ashes. But as you can see, the trend was down. These candles kind of touched this trend line quite a few times. But what happened here? They broke the trend. Now, whenever a trend line is broken, it will tend to come back and retest that line before it changes direction. So this is another indication that this trade is setting up for a buy. It's broken the trend line. It's come back. It's retested the trend line. So that's another good indication that this one could be worth looking at for a buy. At the moment, though, we've still got wicks coming out, and we don't want to be pushing those wicks up, do we? We're going to get stabbed. If we push those wicks at the moment, we're going to get stabbed, and we don't want to get stabbed. Now, if you was going to take this trade, let's say the next candle formed, and it was a lovely flat bottom green candle, we got into this trade. What you would do is you'd set something called a stop loss. Now, on the BYOB, we like to put a stop loss underneath where the SARS flipped. Okay, so it would go under here. Now, a stop loss is where you don't want that trade to go any further in the wrong direction for you. Okay, so say you got into a buy here, okay, you must give this trade enough wriggle room to kind of do a little bit of this before it goes up for your 10 pips. Now, the best place we found for BYOB as a good guide is to put it under the SAR flips, because if we got into this trade for a buy now and it went the wrong way, if it went past these PSARs, it was not going to go up. It's going to carry on going down. So we want to get out of that trade at that point, because if we left it open, it could just keep going down and down and down and down. And not having a stop loss is how people blow accounts. You must always put a sensible size stop loss in. And I've done it, and everybody that's been around has said, "Oh, I'll just keep moving my stop loss. It will turn." And believe me, no matter all the goodwill in the world, if you keep moving your stop loss, that is the day that it will never turn, and you will just lose your money. So please always trade sensibly with a stop loss. And there is a full training within our Ninja team, within the IM Academy, on stop losses, on risk management, to make sure that you do not risk too much of your account size on one trade, and there are tools for you to help you do that. Okay, we always try to promote safe trading. We do not want anyone taking any risks. We don't want anyone taking any gambles. We want you to trade sensibly, and we want you to go for your 10 pips in a sensible way that you are not going to really struggle. So at the moment this is still not ready, but if you can see on the side here, can you see where that says 0736 counting down? This tells you how long it's going to be until the next candle is formed. Okay, this is on the 15-minute chart. So every single one of these candles represents 15 minutes of time that has passed. So at the moment, we're halfway through this candle. Now, we need to keep an eye on this trade, because if the next candle in 7 minutes starts to form and it's a flat bottomed candle, green candle, then I would get in this trade for a BYOB 10 pip trade, okay, because it's looking good. But at the moment, we've got 7 minutes left. So I might just go and make up tea. Right, while we're waiting for this candle, is there anybody got any questions or anything you want me to go over regarding anything that I've spoken about so far today? I think Harry's going to murder her brother. Everybody okay with everything so far? Yeah.
You have to change any settings when you load up the PSAR and the stochastic.
Oh, sorry, say that again, Paul.
Do you need to change any settings when you load up the stochastic on the PSAR?
No, literally the trading view, we just do the defaults. You can look at the if you go to the cog, it'll give you the settings. 2202, there we go for that one. But these are just the default ones, and same with the stochastic. Okay, 1433 is your inputs for that one. But what I tend to do, because I'm showing you and because I'm kind of trying to break this down as simple as possible, is when I go into like my PSARs, you can change the style So you can have like a really thick line so you can see them really, really clearly. And I recommend that anybody that's starting, make these as big as you can so you can visually see what we're looking at. So I've made those as big as I can. And same with the stochastic. If you go into your little cog and you click on the coloured lines, you can make them as big and dark as you want, okay? So that way you can really see these indicators. You can see these lines very clearly and what colours they are, whether they've crossed over, whether they're in the extremes, and you can see your PSARs really clearly as well. And just literally just keep your charts nice and clean and straightforward so that you haven't got a load of stuff on them, so that you are just concentrating on your 3 things on your checklist, okay? So they're the things. And also, once you get to grips with this, I know that we have in our Ninja group some incredible exclusive tools that you will get as a member. We have the Ninjacators, we have the AI, the awesome oscillators, and all of these tools have been created by members within our team, and they are going to make that 3-step system incredibly simple for you. You think this, Harry? Shh, just says yes, I have a license. That's it. I want you to learn this without the use of indicators, without the use of these extra indicators, because if you can understand why we're looking at what we're looking at, then you can be a trader, right? So, for example, the Ninjacator that we've got is, it's literally, what it does is it takes away all of the thinking. It literally, it looks for, is the stochastic in the extreme? Has the PSAR flipped? Has the Heikin-Ashi candle got a flat top or a flat bottom? It stops you from even having to look for those, and it just tells you when to get in. Look, it just says BYOB down, you'd press sell. BYOB up, you'd press buy. And it just tells you what to do. But I don't want you to just get into that on an indicator, because otherwise, if that indicator went down, or if that indicator was taken away for any reason, or the guy that designed it decided that he wanted to take it, you know, and not give it to us anymore, you wouldn't have a clue what you're doing of. You've been relying on something that is not your eyes, your brain, your memory, your thoughts. So the Ninjacator is amazing. If you've got no time and you haven't got time to sit there and look for these things, then it's the best thing is in sliced bread. It's incredible, and I do use it a lot. But I want you to first learn what we're looking for. I want you to learn what the Ninjacator is looking for, so that you can always go onto a chart and you will always be able to get a signal from Vibrator, come and look at your chart and decide whether you're going to get into that trade or not for your 10 pips a day. If you can do that, you are a Forex trader. You are trading Forex. Now, did you ever in a million years think that trading Forex was as simple as looking for 3 things like that? This is why this strategy is incredibly powerful, because people who have never traded Forex in their lives, who have never seen all these charts, they don't understand currency pairs, they don't understand lot sizes, can come in on day one and they can look at a chart and they can tell me if the stochastic's in the extreme. They can tell me if that dot's flipped, and they can tell me if that's flat or not. My 8-year-old boy can trade the BYOB strategy. Noah comes in here and he looks for trades. He's 8 years old. And if an 8-year-old boy can trade Forex, anybody that can come in can trade Forex. Now, what you do with that information once you've learnt it is up to you. You can, you know, the world is your oyster when it comes to Forex trading. If you want to get really down deep with the charts, you can go and learn all these things that people trade with, these heads and shoulders and trend lines, and you know, there's so many ways to trade, there's so many strategies, and there's so many different things that you can go off and do. But first, let's master the very, very basics, because if you can grab 10 pips a day by doing this, you never need to look at anything else, to be honest. You know, all this other stuff, it looks very, very fancy on a screen, and people are going, oh, you know, look at this must be an amazing Forex trader, because there's lines and dots and dashes and all this stuff all over their charts. But really what it comes down to is, you know, is the stochastic in the extreme? Has the PSAR flipped? Has it got a flat top or flat bottom candle? If it has, get in the trade. It really is as basic as that. It can be as basic as that. And what we do with our ninja team is we trade this live. Paul Turner in the mornings at 9 a.m. UK time does an amazing session, and everybody jumps on and they literally go trade hunting. It's like, well, let's go trade hunting, and they'll come on and they will wait for the vibrator or the harmonic scanner, and they will grab a trade, they will shove it on here, and they will just say, right, and they will all as a team together decide whether that trade lines up for those particular things. And we all get in it together, we all press buy, we all press sell, and we all sit there and go, yeah, 10 pips, thank you very much, bye-bye, see you later. And then we all post our results in our little Discord group, which you will be a member of if you join. And you can just see, you know, we are learning together, we are trading together, we are winning together. And I think when it comes to Forex trading, it can be an incredibly lonely thing if you don't have a community like we have. Now, we've got an incredible community and you're never on your own. There's always somebody to help you with questions. We've got so much training. We've got up to 8 hours of live trading sessions a day. I'm just one of the traders on here. We've got trading sessions going on all day with all different types of trading styles, with different levels of abilities. So there's something for everybody. And as you can progress, you will get onto the more advanced training sessions. You will start to, you know, familiarize yourself with lots more indicators to make these trades a lot more certain. Now, this trade here that we're looking at, we've had a candle, a new candle form, as you can see, the next candles form. But look, it wasn't a flat bottom green candle. And look what's happened in the stochastic. Can you see? The sellers have crossed over the buyers. This is a battle now. This is a battle between the Great British Pound and the Canadian dollar. They both want to take control, but neither of them is giving it up at the moment. Look, the buyers tried to take it back here, but the sellers were obviously a lot stronger and they've taken it back down again, right? And look, they're about to touch that flipped PSAR. Now, if that touches it, it's flipped back up again, right? It's stopped, it's reversed. This is still going down. This is not ready to take as a BYOB. Now, this stochastic could stay now in the extreme for another couple of hours, okay? So this isn't ready. So what you can do, you can set alerts on TradingView to come back and have a look, which is another training within itself, or you can go and look for another one. So that one's not ready. I'm gutted about that because I really thought that was going to be, you know, the one that we was going to have a look at, because that was setting up nicely, right? But there is always another trade. This thing sends out trade. Look, since I've been talking, all these trades have come in. It's just because I'm talking that I'm not going through. But if you're not training and you've got these three things down to a T, you can literally just come in here and you can be, in minutes, you can come and have a look. Right, the latest one, Euro Great British Pound. Sorry, Euro JPY. Oh, I've drawn something on here before. Right, remove. Okay, so let's go through our three things, shall we? Euro, let me just make sure that was on a 15. Oh, that was on a 5 minute. What's that? 5 minute chart. Right. Is the stochastic in the extreme? Yes. Has the sellers crossed over and starting to take control of this trade? Yes. Right, next thing, PSARs. Have we had a PSAR stop and reverse? No. Look how far away the PSARs are as well. Don't forget, when this candle touches it, that's when it's going to flip it. It's still got quite a way to go. Shh, a minute. So let's just measure how far it's got. That's got another 28 pips to come down on a 5 minute chart before that flips that. So that's not ready yet. We have got a flat, yes, you had lunch, don't you? We have had a flat top candle, which is one of our things. We've got two of our things in our favor. We've got a flat top candle, we've had a stochastic cross. But we need all three for this to be our 10 pips a day, right? If they're not, all three aren't lined up, then there's something not quite right yet, okay? Now, when it comes to trend lines again, if you drew a trend line on this one, this has been going up. And in my very basic knowledge, which I've been doing this for a while, but literally that could come to this trend line and carry on going up, right? It's literally, it will either break this trend line or it will bounce off of it. So at the moment, this one is not ready. So we wouldn't go take that one. So you go to the next one. Canadian dollar, Japanese yen on the 5 minute. Go back to your trading view, CAD JPY. Same thing. Stochastic is in the extreme. It is up there in the extreme. The reds are, the reds are taking over. They're crossing over, but the PSARs are right down here still. Okay, this is still strongly going up. I still think this is going up. But as you remember, there was a lot of news today. Okay, there was a lot of stuff going on in the news today. So I find it really hard drawing trend lines on these high conditions, right? So this could either come down to here and carry on up. This one's not ready yet. Literally, this is what you would do. It's when you've got an hour or so to trade, you'd come on here, you'd find your trade, okay? Or USD. And they all, I can't stress to you enough how much you must make sure that all three things line up, because you're so much more certain of getting your 90% win rate if all three things are lined up. If not all three things are not all lined up, then there's a chance that it could go the wrong way. Right, so this one, what was that in the, it's on the 5 minute, wasn't it? All USD. Okay, stochastic in the extreme again. There's loads of extreme stochastic at the moment, but PSAR is not flipped, but we do have a flat topped candle forming, and that PSAR isn't that far away. So let's just have a look. It's only 5 pips away. So this all USD one could possibly be one. Now, has it got room to come down to the next line of support and resistance? So let's just put a line of support and resistance in. Okay, it's about there. If you see, it's kind of respected this line a lot. If that comes down to this line, then that is 18 pips. Now, because it's only 18 pips, I'd probably only go for 5 pips on this one to guarantee more that you was going to get it, okay, because it's not that far. But I would have to wait for that PSAR to flip. And if this waited for the PSAR to flip and this candle was here and the PSAR flipped, it's 9 pips. You could possibly get your 5 pips there. But I only take trades that I am 100% certain of. And at the moment, that's not ready. Okay, so that's another one that would not be ready yet. So it really does make, it's good practice to start drawing these lines of support and resistance on your charts just to see where the trade wants to go. Another way to see where your trade wants to go is if you do drop your Ninjacator on there. Ninjacator. What the Ninjacator does is it drops a couple more indicators on your chart for you. Ones that you don't need to worry about at the moment, but it's just a good reference point as well. Can you see this kind of shaded area around the candles? Okay, these are called Bollinger Bands, and you'll hear that expression a lot. And what they do is they're like elastic bands. The trade will go up into the extreme of the Bollinger Bands, and it'll always want to spring back to this middle line. Can you see this skinny middle line going through the middle? Okay, that's your moving average. Now, whenever these candles go up into the extremes of the Bollinger Bands, they want to snap back to this line. So that's a good indication that this one could snap back to this line. Okay, so that would be 12 pips back to that line. Okay. Now, the way that I was explained the Bollinger Bands and the way that I explain it is this little moving average line is a nice, safe path through your trade. Now, you're going for a walk with your children and you're walking down this path, and as you know, kids wander off. And look, the kids, or the candles, have wandered off into the extremes of the Bollinger Bands up here. But those kids are in the dark woods. They don't like it. They will always come back to the path and come back to mum. Okay, they will always do that. They stay with mum for a while. Oh, they've got bored. They've wandered off. They've got up into the woods. So it tells me that these kids are going to come back to mum in the middle as well. So this trade here is a really, really high possibility that this candle is going to come down and it's going to hit this middle moving average line. You've got a stochastic cross. You've got the candles up in the extreme of the Bollinger Bands, and you're a little bit away from the path. Okay, so this tells me that this is going to come back. But because we are just doing basic BYOB, we have not got a flat top candle. We've got wicky spikes that are just literally not ready to push down. You're going to get spiked if you try and push that down, okay? And look, they're indecisive. We've got doji candles at the top. They've got hardly any body to them. They've got big wicks. That means they are indecisive about where they're going to go. And this keeps flashing green, it's flashing red. It doesn't know what to do with itself. So unless that candle came down, flipped our PSAR and started to form a flat topped candle, I would not be interested in this trade yet. That one's not ready. Okay, so let's see if there's anything else coming. New Zealand JPY, let's look at that one. Now, the biggest lesson you're going to learn with Forex trading is patience. Okay, don't go chasing trades. Don't think to yourself, oh my God, I've not had a trade yet. I'm really desperate. I really want to take one, and just take one for the sake of it, because it never works out well. You have to be patient and let the trades come to you. When you see the perfect setup and all three criteria are met, and you take that trade and you walk away with your 10 pips, I tell you what, it's the best feeling in the world, because you have followed the rules and you have literally done exactly what you were told to do, and you've got your 10 pips. If you then go into the market because you're bored and you take a trade because you think, oh, maybe it will, maybe it won't, and it turns around and bites you in the arse, then that is the time when you say to yourself, right, back to the rules, back to being serious, and let's just follow the rules and do, you know, wait for that trade. You only need one trade a day, 10 pips, that's all you need. So you can nip in and out and look at these as much as you like until you find that perfect setup. So anyway, I'm jabbering on. Let me just see what this time frame was. MJ was a 5 minute. Lots of 5 minute ones coming in. Right, what's the stochastic in the extreme? Yes, very much so. The reds has crossed over the blue. The sellers are taking control and they're starting to take this back down. That is a brilliant stochastic. That is the sort of stochastic we want to see in a BYOB. It's been in the extreme, it's crossed over, and these lines are starting to become quite far apart. This is a nice, strong sell move. Has the PSAR flipped yet? No, that's the only thing about this trade that is not in its favour at the moment. Because look, we've got two flat-topped sell candles formed. But this also, if you were going to look at this and you was going to draw a trend line, now a trend line is where the candles hit it the most, okay? It's as simple as that. Look, this has been in an uptrend on the 5 minute. It's been in a trend, it's come back, it's gone up, it's hit the trend line, it's come back. This could literally come back to this trend line and bounce back up again and carry on up. Or if it breaks this trend line and flips the PSAR, then there's a good chance that this will retrace a little bit back to the trend line, and then we would get our flat topped candle for a sell, and we would take that down. Now, the next line of support and resistance on this trade would be probably about there, right? Let's change that to yellow. You see it's respected, it's gone through, it's come back, it's bounced through, it's come back again. So if this PSAR flipped and it broke the trend line, there's possible 12 pips in that one to that line, or it could carry on going all the way down. It could go, keep going. But that's probably not enough at the moment, because as soon as it flips that PSAR, that candle's going to be here, giving you maybe 6 pips. You could possibly get 5 pips out of that one. Okay, so that one's not quite ready yet either. So I am not happy to call any of these trades yet. What was that one we were looking at? It was quite good. I can't remember what it was now. GP something, wasn't it? Let's just see if it's done anything or if it's carried on going down. The GU.
The GP CAD.
The GP CAD. I think it was, wasn't it? I should have started it really, shouldn't I? Yeah, see, look. That's carrying on going. I think it was on 15 minute, wasn't it? Yeah, look, see, even though the stochastic was in the extreme and the blue started to cross over, you'd probably think, yes, excellent, this is really good, right? And then look at these wiki candles. Them wiki candles are proving to me that this isn't ready. And look, we had a PSAR flip, which was excellent, but look, the next candle was not a green buy candle, and it certainly didn't have a flat bottom, and we've had another PSAR flip. So this one is not ready. This is going to mess about down here, and it's probably going to form what's called a channel, where it will bounce in and out of this channel for a little while before it makes a decision. You can draw channels by using your horizontal line and seeing where it's touched the most, and I think that's going to bounce around in there unless that breaks through and carries on down. Let's look back, see if that channel corresponds to anything from the past. But really, it's been a while since it's been down there. So I reckon something's happened in the Great British Pound News for that to be right down. Oh, it's starting to come back to here. but it's
The
broken.
wicks have touched it, Sarah, like a double bottom.
Yeah, they have, haven't they?
Yeah.
So yeah, I'm not sure what's going on with that one, but that to me is sending out kind of, as Paul Turner says, my spider senses are tingling with that one. I'm not sure I like that one at all. So that one's not quite ready yet. So anyway, there's not really anything at the moment that I'm happy to tell you to get into at the moment. There's nothing that's quite ready, but what I would recommend that you do is when you come onto your web analyzer is just to go through your 5-minute and your 15-minute charts and just to see which one's like, oh, look, we've broken our trend line on this one. Euro JPY, can you see it's broken the trend line? Now, will it flip for PSAR? Will it flip it for a BYOB trade? Let's have a look. Oh, it didn't flip it. Look. We've got 4. Yeah, the new candle's formed, but it's not flipping it yet. Oh, look.
That wick nearly touched it though, didn't it?
Look how close that was to flipping that.
Would you not consider taking that in view of that?
No, because the PSAR hasn't flipped. I won't take it unless every 3 things have lined up because I've done it before and it's not worked.
Right.
I'm nearly finished, baby, okay, and I'll do some stuff with you, okay? And also, what would worry me a little bit is that this is on a massive line of support and resistance now. Look, see how this is kind of, it's kind of stuck. If that broke through there and flipped that, then yes, I'd be interested and I'd get in that for 5 to 10 pips because I think that would probably come down to here. But at the moment, it's messing about. It's messing about a little bit, and I wouldn't take it yet. I wouldn't take it.
Could be forming head and shoulders, couldn't it?
It could be, but I'm not looking at head and shoulders. It's far too complicated for this session. Far too complicated, and I don't want to confuse anybody with that. But yes, once you know things that you've learned in other strategies, you can then apply your knowledge to what you're looking at even more, and it does give you more indications of, well, this could be that, this could be that. But yeah, there you go. There's a BYOB setting up for you there. But I have to go because it's 4 o'clock and I know David Kahn's on and he's doing his live session with Sarah this afternoon. And they will be looking a lot more advanced stuff, and they might even look at the 25 for life strategy, which I know a lot of people are really, really doing well with, which is a bit of a long-term strategy. It's not such a quick scalping strategy. So before I go, did anybody have any questions? I haven't checked the chat at all.
I've kept an eye on the chat, Sarah. There's not been anything.
Excellent. Just wonderful comments. Thank you.
I just wanted to say cheers for that, Sarah. Learned a lot on this session.
Oh, fantastic. Thank you, Dave. Thank you so much for everyone that's jumping on. Hello, Christine. Hello, Stanley. I've just seen you pop up on my screen.
Sarah.
Hello, darlings. You're right. Thank you for jumping on.
Thanks, Sarah. Very good. Sarah, that was brilliant.
Welcome. Thank you so much, everyone.
Thank you, Sarah.
And I hope that you know, some things made a little bit of sense there. And I will see you all back next week. Tuesday, Wednesday, and Thursday. I'll be on 3 p.m. UK time for more tea trading and tantrums from my children. But yeah, thank you very much. And go and happy pipping and keep an eye on that one, okay? But at the moment, look, oh, it's playing around. But Euro JPY would be my one to keep an eye on this afternoon. All right, so go and enjoy David Kahn, and you've got Les on later as well. So go and make the most of these live trade sessions because, you know, they're there to help you. So thank you very much, and I'll see you all soon. Bye-bye.
Happy
Thank you, Sarah.
Bye.
Bye. Now, how do I end my meeting? Stop share. There we go. End the meeting.